All right. Good afternoon, everyone. Good afternoon. Good afternoon. Good afternoon. Yeah, we have been trying to set up our connections on our social media handles, especially on YouTube and Facebook, and do the thing we have it there. So I welcome everyone that is joining us today from the physical persons that are joining us at the office, Mr. Goswill and Mr. Daniel. You're welcome. I also welcome those joining us on Google Meet. Mr. I have Mr. Echefu here and Mrs. Adigun. You're all welcome. And I also have those joining me on Facebook Live. Yeah, and also those joining me on YouTube Live. So you all are welcome. Today we are going to be dealing with something very, very important on the online money making industry. I'm your host, Coach Vic Henry, and this is Coach Vic Henry Digitech Consultancy, where we and also freelance jobs and also things you need to know that is going to help you, or tools that are used for money making on the online industry. So I want you to stay tuned as we move into it and grab it. So for those of you that are on Facebook Live, I believe you're hearing me. If you're not hearing me, please call my attention by tapping, sending a comment on the comment section that you are not hearing me or my audio is not, no, you're not hearing my audio. So let's quickly dive into what we have for today. Yes, last week we talked about what is Forex, and we are able to go through it to understand it. And this week we are also going to be talking about more on that area. We're going to be talking more on that area. So I want you to pay attention. You're welcome, madam. Yeah. I want you to pay attention while we go through it further for better understanding. Be sure that those with me on Facebook. Okay. All right, let's quickly dive into it. I'm going to be sharing my screen with you so you can see the presentation. All right, as last week, we talked about what is Forex trading, and I was able to, explain to us what Forex trading means, which is simply the trading of currencies and other financial instruments on the largest financial market, which is the Forex exchange market. And we also say that more than $7 trillion is being traded on this market every day, apart from Saturdays and Sundays, where you can only trade on cryptocurrencies. But as for fiat currencies, that's the normal country currencies that we use, it's traded between Fridays and sorry, between Mondays and Fridays. So we went ahead to talk about types of forex markets. We have the spot market, which has to do with immediate exchange of currencies. We have the forward market, which has to do with contracts for future exchange at an agreed price, which is mostly what is done on the forex exchange platforms. That is for on the foreign exchange platforms. We have the futures market, which is the standardized contract for future exchange, and this is related to. Then we have the common forex trading styles. Common forex trading styles is the styles in which forex are being traded, and these styles are basically referring to time frame. Time frame. So they are more identified by the time frame you use in running your trades. So for somebody who runs on scalping, the person does more of 1 minute, 2 minutes, seconds trade. So within seconds, 1 minute or 2 minutes, the person must have been able to take his profit or close the trade on losses. So we also talked about the day trading. Day trading, that is entering and exiting trade within the same day. So which also has to do with time frame. So those that uses this day trading method, they always, work on time frames that are on minutes. Let's say 5 minutes time frame, 15 minutes time frame, 30 minutes time frame, 1 hour time frame. They can run on day trading, which means they open their trade and close it within a day, whether with profits or with losses. So let's note this. When we enter into understanding time frames in forex trading, we'll understand this very, very well in depthly. So we have the swing trading. So there are those that they can hold their trades for more than a day. They can hold it for weeks. So that's what it is, holding trades for days or weeks. So they can hold it for days, they can hold it for weeks. This is a recap of what we did the last time. So if your trade exceeds 1 day, exceeds 1 week, enters into 2, 3 weeks, even 1 month, then you are a swing trader, which I also say that I am a swing trader. Most traders we have are swing traders. Then we have what we call position trading, which has to do with long-term trading based on fundamentals. Now, what do we call fundamentals? Fundamentals are basically the news and events analysis, using news and events to an more technical. So those that do position trading, they work with news, they work with events, they work with policies, that is new policies that are being created. Just like we have Trump as the new United States of America, it's going to affect some cryptocurrency markets. We will see the effect of those policies. It is showing on the market. Like yesterday, he made mention, I think yesterday morning or day before yesterday night, he made mention of 3 to 5 currencies, cryptocurrencies that is going to be part of the American cryptocurrency reserve. And immediately the cryptocurrency market skyrocketed. It pushed up immediately within seconds. It pushed up. Then from that announcement till now, the thing came down drastically because he also made another announcement about the tariff that is coming up around April. So people are very much uncertain about, what is going to come up. So a lot of people are playing safe. And we also notice that people are putting their money in gold just for safety, because they want to, they want to be sure of what the Trump's government is about to do before they now, settle down on their trade. So what does this mean? It simply means that With this kind of news, position traders can make decisions. They can say, okay, with what he said, this is what is going to happen. Like I said something now. I said that people are putting their money in gold because that's the only place they can trust that policies does not affect negatively. So what will a position trader do? Yeah, simple. He will go into gold maybe with a buy position long term. And that buy position means that a lot of people are more people are going to be buying gold. And because more people are going to be buying gold, if I enter to buy gold, I'm going to make profit. So he will enter it on a long positioning. And within 3 months, 4 months, 5 months, even sometimes 1 year, gold has moved up and he has made a whole lot of profit. But this particular set of traders, they are always blessed with a lot of patience. Yeah, you have to be a patient type. If you are not, man, you cannot just near it. If you are the type that feel like every month I just want to be making profits from forex, then don't come. They just want to put money as an investment of 1 year, 2 years, 3 years, even 5 years, and they wait. I also mentioned that position traders always go for also things like stocks and bonds, like those things that have to do with long-term growth. So I said that. So let's move forward. History of forex trading. So I said that we are going to, do more around this today. Different things that happened to get us where we are today on the forex market, on the forex trading industry. Now, the first thing about history of forex trading is the barter system. We all know about history in our classes. For those of us that did history in our classes, we all know what trade by barter means. We are taught part of this. And those days, people exchange goods instead of money. People exchange goods instead of money. And it's a simple system. And what does this system imply? It implies you bringing a particular item you have in your house, either property, appliances, and maybe you need food. And the other person will now bring food for you. And you now quantify the appliances or property with the food, the quantity of food the person brought. And if it tallies with what you have, and the person agrees with what you have. So it happened in those days before the existence of paper money and currencies. So it happened in those days. So after that stage, we now entered into the gold standard stage. We started in 1875, and currencies were backed by gold, which means if you say that your country has a currency, it must be backed by the gold standard. Now, in that gold standard era, we have gold pegged at $35 per ounce of gold. There's something that is happening on the crypto industry today, which started with Bitcoin. That's the reason I keep telling people to, buy into cryptocurrency. As we are doing this training, we are also going to be talking about cryptocurrencies. So both of them work hand in hand. Forex and cryptocurrencies work hand in hand. As a matter of fact, you can trade cryptocurrencies on the Forex platform. Yes, just like you can trade cryptocurrencies on the crypto exchanges, you can also trade cryptocurrencies on the Forex platform. Almost all of them that are established in the markets, that are on coinmarket.com, especially the first 100 are already in the Forex brokers platforms. So you can actually trade cryptocurrency on this platform, on the Forex platforms. So as we are going through the training, we are going to also be talking about cryptocurrency. So you open your mind to also receive things that has to do information, teachings that has to do with cryptocurrency. So now, when the gold standard came into place in 1875, we have the gold pegged at $35 per ounce. And that is exactly what happened with Bitcoin when Bitcoin was launched in 2009. Bitcoin was also pegged with dollars at less than $1. Now, one Bitcoin today is about 80-something thousand dollars. As at yesterday, when Trump made the announcement, it moved to $93,000. From there, it came back down, I think, $83,000 or $85,000 right now. So imagine you got one Bitcoin in 2009 below $1, and today that same one Bitcoin is at $83,000, just one. That's exactly what happened with cryptocurrency, and it also happened with gold. Now, from 1875, where gold was pegged at $35 per ounce, go and check the forex market today. Gold is about 2,300 and something thousand, $2,300 and something dollars on the forex market per ounce. So which means it has been going up. It has been going up. And I believe the more the world keeps evolving, gold is a particular metal or instrument that is so useful more than every other currency. Yes, it does not even have only currency qualities. It also has physical utility qualities. You can use gold to mold things. You can use it to bring out jewelries. You can use it to decorate. You can use it to do a lot of things. So which means that gold as a currency or as a financial instrument is the most powerful currency in the world and most needed, because whenever there's going to be a currency crisis, people run to gold to save their money because they know that gold will always be useful. And one thing about currency generally, whether it's cryptocurrency or fiat currency, which is normal currency that we use, what makes it authentic, what makes it being demanded by anybody in the world is its utility value. What is it going to be used for? So when we are dealing with currencies like cryptocurrency, when we are dealing with currencies like crypto, we should understand that number one thing you should pay attention to in any cryptocurrency that you're buying, in any cryptocurrency that you're going for, is its utility value. Is there any plan for this cryptocurrency to have a utility value? Does it have a utility value right now? What can you use it for? Is there any programs that are running with this coin that are genuine, that are not Ponzi schemes, that are real? These coins, do they have investment qualities? Can you use these coins to buy anything in the market? And that's the reason when it comes to cryptocurrencies, it's still a kind of, it's evolving, it's still coming in because people have not started accepting it for goods and services. So if you check in this history of forex trading, You will now understand that during the barter system, you cannot come to anybody with gold and the person will maybe exchange with you with other things. Yeah, you can do that with gold because gold is useful beyond currencies. But let's look at paper. You can't come to anybody with paper, any kind of paper. Give me this thing with this paper, and the person will accept. It's not being done. They want something that is useful, and it has to be useful to that person. And this brings me to, money making generally. Now, when we talk about money making, people don't understand the roots of money making. If anybody got money, you must earn through goods or through services. That is it. That's the equation. That's the mathematics there. Somebody will wake up one morning and go and learn a skill that is in high demand. And before you give that person 5 years, the person is making money because he has been able to serve humanity with those goods. At the end of the day, the person becomes a millionaire, a billionaire. So this is got to exchange goods to goods. Then, and when it came to gold standard, because they found out that maybe gold is one of the most important valuable item that existed on earth then. What did they do? Simple. They said, okay, since valuable asset that we can use in place of anything. Everybody wants gold. Everybody wants gold. Oh, wow. If everybody wants gold, because even till today, if somebody brings gold to you in form of bars, you'll be like, I want this. So even the shining nature, the luster nature, you'll be like, this is looking good. This is precious metal. I want it. When it says maybe one bar of gold could be like, let's say 1 million, for example. And if it says, I'll give it to you for 1 million. You say, I don't have 1 million. I don't have 1 million. Can I pay 600,000? Now you see that you have started attaching value to what he's showing you. Now let's put up another maybe entity. Somebody brings a laptop to you, and you already have a laptop in the house. But this laptop is going for 500,000. You say, I have a laptop. Right? Yeah. But no matter how many bars of gold you have, you want to be acquiring more. Because people see it as the most precious asset and metal on earth. And I think that was the mindset that was still there about this gold standard in 1875, where currencies where that is backed up by gold. Simple. 1 ounce is $35. So in this $35, how many ounces of gold does your country have? It is now by country, not by individual. Okay, my country has 1 million ounces of gold. So it means that your country's economy is worth $35 million. So it's now becoming clearer to people across the border. Now, the trade across the border was not being understandable. Someone in Nigeria can say, okay, I want to buy your goods in abroad. What I have is naira. How do we convert it to dollars? That's okay. This your naira. How many ounces of gold can we buy in your country? It's okay. This my naira can buy 3 ounces of gold. It simply means that what you have as naira is 35 times 3, which is $105. So it means that naira you have is equal to $105 because it has been passed in every other country. They can now measure their currency with ounces of gold that currency is worth, then convert it to dollars, and they will now know, okay, this is how it is. So with that particular measurement, it was becoming clearer, trade was becoming becoming easier for the whole countries around the world. So we also have types of gold standard that was used that time. We have the gold coin, we have the gold bullion standard, and we have the gold exchange standard. Now, when it comes to the gold coin standard, we have actual gold coins that are used in daily transactions. Now, in normal gold, the main gold coin standard, they use actual gold. You don't need to convert it to dollars. You give me gold, I give you your goods. How many ounces of gold is your goods worth? Or is your services worth? You give it to me, I give you. Because then we have the gold bullion standard. Then the gold bullion standard was paper money was backed by gold, but only large amounts could be redeemed. Only large amounts of this gold could be redeemed. So they had paper money, like the $35 was coming in paper money, but it was also backed up by gold, which means that with your trade with the dollars as paper, but you must have to do it in large quantity. It must be a large quantity before you get to do that. Then we have what we call gold exchange standard. Some countries pegged their currency to another country that used the gold standard. So what I exactly explained now, that Naira can be pegged to gold and US as it is pegged to gold, then with the pegging, you now know the equivalent of your Naira to dollars. I explained it here. So this was what happened on that gold standard. So that kept happening, kept happening until ended. Then we now entered into the Bretton Woods Agreement, where that shift. Okay, no, it continued to the Bretton Woods Agreement 1944. That is number 3. So in 1944, the Bretton Woods Agreement now came on. Now, Bretton Woods Agreement removed the pegging from gold to US dollars. So since we now know that 1 ounce of gold is $35, it was increasing. It was increasing. So they now said, okay, why don't we trade the gold versus US dollars directly? Then peg every other currency with US dollars. I think what caused that, when you have currencies in a particular like a central, let me give you a typical example. What do I mean by central currency? The whole world can have access to Bitcoin, and it will have a utility value all over the world. Same attributes to gold. I can take gold anywhere in the world and it will be useful. But I cannot take Naira anywhere. In fact, once I leave this Nigeria, my Naira that I'm holding is useless. Just like somebody in Ghana. Once you come to Nigeria, your Ghana TD is useless. But if you travel from Ghana with gold to Nigeria, your gold is one of the disadvantages faster. Because the more people hold this currency, because it is useful everywhere. So you can easily think of, let me pack it. And also note that gold is not perishable, right? Gold is not perishable. So people will want to. And once it is scarce, what happens is inflation. Because the demand will now be much, then the rate of the gold will move up. just like what happened with Bitcoin. From 2009 to date, that's a space of how many years? Space of 15, I think 15 years, right? 16 years till 83. Let's just use today's because it has hit $100,000 before. From $1, below $1 to more than $100,000. Why do you think it's that way? Because people hoard this currency. Do you know that the who and who in this world hoard Bitcoin? Like they hold Bitcoin like this, like they are holding their life. We know about their name. I've forgotten their name. Something wrong. We know about them. Then, I think, sorry. Then we also know about this country. It's El Salvador, right? That bought Bitcoin in large quantities. BlackRock, MicroStrategy. These are companies, these are people that bought Bitcoin and they are holding Bitcoin as if they are holding their life. And just because of this, hoarding, I call it hoarding. Because when you hold something beyond the limit, it is hoarding. And once they are scarce, people will start looking for them. And the person that will make it available for them can increase the price. And that's exactly what I think that started happening with gold. People started hoarding it. And the price started increasing beyond control. And they now enter into Bretton Woods Agreement, which happened in 1944. This Bretton Woods Agreement pegged currencies in US dollars. So for you to do any kind of trade across border, your currency must be converted to US dollars first before you can now know what the other person's currency is saying or what the rate of other persons do. 1971, that is the fourth era. I told you I'm going to talk about the fifth era, which we're already talking about. Now, in 1971 came the end of Bretton Woods. Now allow the floating of exchange rates. So there are places where you go to. They don't need to talk about US dollars before they exchange their money to your money. Now, when you come to the Forex platform, you have currencies that are not pegged to US dollars. If it was during the Bretton Woods Agreement, you cannot trade any other currency without. If you have something like euro, it must be US dollars following it. You have something like pound, it must be US dollars following it. You have something like Japanese yen, it must be US dollars following it. You have something like Canadian dollars, it must be US dollars following it. What about Australian dollars? It must be US dollars following it. But when you come to the Forex platform today, you can see euro to pounds. We call it euro GBP. Another currency, maybe to pounds. You can see the pounds to maybe, let's say, Australian dollars. So other currencies of other countries can now be pegged with other currencies without going through the US dollars. And that was where this Bretton Woods Agreement started, and the floating of currencies with other currencies. It now allowed other currencies to also trade amongst other currencies without going to, like I said, without going through the US dollars. Now, we kept doing that all these years. We kept doing that until we are now in a new era. And what's this new era? It is the cryptocurrency era. Now, in this new, you will notice one thing. We have cryptocurrency as related to gold in particular. But it's as if it has come to eradicate the era of paper money and physical money. If you also notice, most of these currencies are now working digitally. There are some places you go to, you cannot see dollar in its physical form. Everything is transfers. You pay with transfer, pay with code, and transact with somebody overseas without sending money physically, without meeting the person one-on-one. So the cryptocurrency improved the digital transaction. And as we go, we'll keep noticing that it is shifting away, pushing away the physical money. And there's also one thing the cryptocurrency era is doing. It is decentralizing money. Money can even by regulators, because cryptocurrency tends to be decentralized. It is not owned by any country. It is not any country's currency. Everybody can have access to it. And your wallets are very much decentralized, apart from the exchanges. I'm not talking about exchanges. When I talk about wallets, I'm talking about wallets like Trust Wallet, MetaMask. The wallet gives you gives only you the access time. So which simply means that cryptocurrency era is coming in to decentralize money and now make digitalized money completely. So as it keeps evolving, we'll be seeing this thing play a role. So now we have gone through the four types, which I added another one, four stages of forex history. I added the fifth one. So let's look at okay, I think this is where this presentation ends. Training. We are going to be talking about we're going to be looking at the forex platforms. We're going to be looking at forex platforms and exchanges. Yeah. And also we're going to be looking at currencies. So let's have this in mind, because as we go into these classes, we'll be understanding this better. If you're following closely, you'll be able to grab it, and it's going to help you to understand the other areas we are going to look into. So our next class is going to talk about trading platforms and brokers. And in that class, you'll be able to understand the different trading platforms that we have, and the brokers. When I talk about MetaTrader 4, MetaTrader 5, and other trading platforms where you can execute your trade. Then when I talk about brokers, I'm talking about platforms you can actually run your trades on. Yeah, you can sign up on these platforms and put your money in. For example, MetaTrader 5 it comes to And talking a little about brokers, there was a time we have what we call stock brokers. You can see them in the banking industries. They tell you what is going to happen with stocks, what is going to happen with shares, and you buy into it. It was not done through Forex platforms. So, but today, we have brokers who are licensed and they are working online. They have their platforms online. So you must sign up with these brokers, then deposit your funds. Though when you're practicing, you're going to practice with what is called demo. And as you're practicing with demo, then you understand it better. But if you are not practicing with demo, you can go straight to fund your account with real money. And as you're funding your account with real money, you can now trade and make profit as real money. Then you can still lose your money if you are not careful. So that is, we are going to be talking about these two areas, the platforms and also the brokers. So we are going to know different kinds of brokers, and we're going to know what makes them unique. And we're also going to talk about platforms and how it's being used. Then briefly, let me just dive into talking about safest ways to also invest our money. So I've talked about we are on Forex trading, but don't forget that we also have investment platforms which are already endorsed that we can still be part of. Now, for the aspect of Forex, for my firm, that is Coach Vikeri Digitech Consultancy, we have an investment pack for you on Forex trading, which I can handle your funds and you get returns every month. We start from 200,000. It was from 1 million, but according to the plead from most of my people, so said, okay, bring it down to 200,000 so that we can be able to grow our account. I said, okay, I've got it down to 200,000. You receive 5% every month of the money until 1 year you take back your capital. Then we also have training. That is the advanced training. What we are doing here is basic training, which is free of charge. You're going to know everything about Forex and even know how to trade. But for anyone who wants to be successful, even for a life, a certain strategy that will help you to trade successfully and be on profits generally or overall or over time. So, and we have that strategy. We can teach you that strategy. And for you to learn or to buy into that strategy and make use of it, you're going to pay for it. And our fee is 1 million in Naira and $500 if you're paying in dollars. But if you're doing the basic training with us, it's free. And this basic training will give you everything you need about Forex. Now let me tell you on your own. Yes. But I know that for you to go through that journey of developing strategy on your own, you might lose more than that 1 million while you're trying to do that. Because some of us that we're able to gather a strategy, it is born out of losses. Now, for every time you lose, you learn something. Even in physical business, if you lose money in physical business, there's something you have learned if you look closely. So some of us are lost trying to gather the strategy I have now that is working. You might not, you might feel like maybe I shouldn't dare to go through the road of developing my own strategy, which is true. You might go developing your own strategy and it will bounce back. And that's why we are doing it once and for all for you. You develop your strategy. We have developed the strategy for you and make money. So the training on that is 1 million. If you're paying in dollars, you're paying $500. Then for your investment part where you can, put in your capital and we trade for you from 200,000, it goes up to 3 million, 5%. And once it's above 3 million, we can increase your percentage. So this is just an offer for anyone who feels like I don't want to go to the houses of trading. Then for those of you that want to build your income, you want to build your capital over time and grow it to the point where you can do this bigger investment, can be part of build up portfolio, which even starts with as low as $5. You have saved, you get 30% of it. Everything you have saved, you get 30% of it. Then you can still do the fixed deposits, which you can start from $25. Then you're paid 5% every month until 1 year. Your capital comes back to you, 80% of it comes back to you. You can do as much as you want to do from that $25. Then for the savings part, you can do $5 to $50 package. So without lifting a finger, yeah, because I tell people that when it comes to investment, it's either you're actively present or you're passively present. Actively present means that you're doing something, either services, you're rendering where you put your money, you're still rendering services, just like being in these investment platforms and still doing the networking that is involved. It makes you earn higher and faster. Yes. Like personally, I am in build up. I still invested up to $1,000 and above, but I'm still passive. Then also, I invested. Then there are those that invested. They are not even talking about it. They're still making their money every month. Those ones are passively involved. They don't have to talk to anybody. Their money is there. They are making money. Even at Forex Park, your money is there. You're making money. You don't have to talk to anybody. But when you want to be passively involved, you can actively involve. You can now talk to someone, just like our Forex Park. You can talk to someone and get 5% referral bonus when the person comes in through you. Same thing with build up portfolio. So all is now left for you to know if you're ready to do that and take your finances to the next level. I keep telling people what you do with the information you're getting is what matters, not to get the information. So I believe we've understood everything I've said. So we are going to draw the curtain here and we are going to be taking questions right away. So if you have any question, please, it's time for Google Meet on Facebook Live. You can also send your questions through comments. Let's go ahead with our questions. Anybody, any one of us here physically? Okay, go ahead, Mr. Godswill. Please, if you're on Google Meet, you can raise your hand. If you have any questions, after I take the physical questions and I'll take yours. Please go ahead, sir. Okay. 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 Because they mine it, right? Okay. Okay, let me answer. Okay. Let me answer you. You know, all these mined ores, they are regulated. You can't just mine gold and sell anyhow. And remember that before you even get it as gold, the real gold, you have to go through a purified process. So, and all these processes also
So we are not hearing you again. We are not hearing you again, sir. So we are not hearing. We are not hearing you again. So we are not hearing. We are not carrying along. We are not being carried along.
Are you hearing me now? Are you hearing me now? Yes. I have to change my audio system. Are you hearing me now, Mr. Stachko? Are you hearing me now?
Yes, I can hear you.
Okay. I have to disconnect the audio that is not helping. Okay. So I don't know if you got the last question. He said the gold is being mined. So how can it also affect the price as it is mined by country? So I was explaining that yes, it can be affected because even the mining cost, and nobody, it's not anybody that can just go and mine gold, and it's also regulated by government. So government can decide the amount of gold that should be mined at a particular time, and also which can decide to hold it. So I believe is understood. So any other person with question? I just hope that. Okay, okay. I think. All right. You have a question. Okay, go ahead. Let's take it. This forex trading. Okay. How do people make profit? Dollar is as 1,500. Let me just say 1,500. Okay. Dollar in Nigeria. Okay. So how do people make the profit? If you say that that's 1,500, how come people are not making more profits? Okay, let me explain that to you. You're asking how people make profits from, let's say, dollar and naira. How do they make it? Let me explain it to you. Though we are still going to come to this proper level. Let me still give you an idea of what happens here. Okay, you know that even when dollar is not stay there, it can go to 1.6, can go to 1.7, it can come back to 1.3, can come like within the last 3 weeks, dollar has been coming up. Yeah. So and the reason that is happening is because of Trump's policy. Nothing else. Lately, travels are being restricted. Yeah. Then secondly was wiring money. Some banks in Nigeria have like listed abroad. So people can no longer transfer dollars easily for now until maybe when things set in properly. Even people that are doing trade, that is buying goods from abroad, they are still waiting to see what will happen before they come in fully with their trade. So now what happens is this. When dollar is at 1.5, for example, you can say this now where the prediction that we do comes in is personal. If you know, see where will you see that thing? You're going to see it in two places or in two ways. One is your technical analysis, the other one is your fundamental analysis. Your technical analysis is what you're going to see on the trading platform, signals with indicators that will tell you this is what could happen, this is what might not happen. Then fundamental analysis, when we mentioned it as we are trading, we talked about events and news. Like I've told you, Trump policy. Now, somebody who is smart might know about this when the elections are going on. And what was dollar at that time? 1,600 and something, almost 1,007. And the person will buy what? We sell the dollars that he has that time. They say the person have bought some time ago when it was 1.2, for example, and he got the news that this thing is going to happen. If Trump enters, there's certain things that is going to happen. And that's okay. Let me sell this dollar I bought at 1,200 naira per one. Let me sell it at 1,600 naira. Now, when the person sells this dollar, maybe it has taken the person 2 years to hold this dollar. Now, let's place a figure. Let's say $1,000. If you buy $1,000 at 1,200 per one, you're going to be spending how much to buy $1,000? About 1.2 million. Yeah. Now, at this 1.2 million, dollar is 1.6 million. How much profit has he made? 400,000. Now, he has sold it, everything. In the last trade, he has 400,000 secured. Now, remember that dollar is still at 1,600. So if he goes in immediately to buy, his profit is not secured. No, he didn't make profit. So he has to wait because of the policies that is coming up, so that those policies will work. So now dollar has come to 1,400 and something. And I said, should I buy now or should I wait? It's not a decision based on what he has seen from what the policies or whatever is going to happen. So if he buys it now, let's say at 1,450, he's not making 400,000 profit again. He's not making 150,000 naira profit. But what if he buys in and the thing still keep going down to 1.2? He would have made 400,000 naira, but he could not make it. He only made 150,000. And then he can still decide to use external funds and buy in again. Why that one is still there? He buys him at every point it's coming down. So that whenever it goes up again, he makes profit. So how they make profit, or how we make profit on the trading platforms, or even physically, is you target when it goes down, you buy. When it goes up, you sell. You sell. So you buy when it's down and sell when it is up. So in that time, when it is up and sell when it is down, you circle out with what? Losses. So that's what happens in Forex. There are people that still like, okay, I will not get there. I don't want to get you packed in with a lot of information. We have two types of, trading. We have what we call reversals and trends. So you can trade reversals, you can trade the trend. Trading reversal is when it goes up, you buy, you sell, believing that it will keep going up. When it's coming down, you're selling, believing that it will keep coming down. So I will open it up more as we go in the training subsequently. So any other questions? We are wrapping it up for the day. From our online people, Google Meet, any other question? Any questions? Wrapping it up. So for those of you that feel like you want to start up something with your capital that you have at hand, at least any amount, you can start with build up. You can start with our forex trading packs, 200,000 above, build up from $5, which is around 8,000, 9,000 above. You can start something. So any of you that wants to, on our online audience and also physical audience, you can come around. So we'll talk, or you send me a DM, we'll talk. So it has been a wonderful moment today. And remember, and we have another time to meet again, which is on Friday, 12 noon. So, and for those of you that are joining us late, you can watch the training on our Facebook Live. You can also watch it on our YouTube. Then I put links on our WhatsApp groups for those that will not join us. So thank you for coming in. I really appreciate you all. God bless you, and I'll see you all on Friday. Thank you so much.